What's up, guys and gals? Anthony here with Special Analysis. Hope you're having a wonderful day. I want to talk about the S&P 500. It kicked ass and took names for us this morning. So did the Nasdaq. The S&P, though, in my opinion, set up a little bit cleaner. However, the Nasdaq really ran almost perfectly. So let's talk about both. We're going to start with the S&P 500. That's what's in front of you, so let's get into it. All right, so we got to go through the checklist. What does the checklist entail? Favoring the 15-minute moving averages, above or below the VWAPs. Okay, we run two VWAPs, the fixed and the rolling VWAP. We run three fast moving averages, 21, 13, 8 EMA. Okay, we also look at volume and we look at a modified MACD. So I want to see the histogram off the zero line. I want to see the signal line leading the histogram. So what do we have here? We have trend establishment, right? Here's the 15-minute 21 EMA, 15-minute 8 EMA. Both moving averages trending lower here, okay? We get a breakthrough, a prior low, 8:30. We have a news release. We get a little whipsaw here. Don't want to enter the market based on a news release. I want a nice, clean setup, okay? Market pushes down. We close below this prior low, close, set a little pivot here, push back up. Little bit of indecision right here in this area. So above is now considered resistance, and below is where we're looking to go. So I just put a little mid-trend kind of correction here in place, right? So we got some sequentially higher lows here, and we break that. And that occurs right here on that candle, right here. So the close of this candle, it says, hey, Mr. and Mrs. Trader, everything's in sync. MACD's off the zero line, signal line is leading the histogram. VWAPs are applying pressure. 15-minute EMAs suggesting a bias to the long side on the higher time frame. 21, 13, 8 EMA here suppressing price action. You can see that with just, respecting that 8 EMA as it falls until it starts to lose its trend momentum here. And guys, we got, selling volume coming in. We're in business here. So right here, we sell the market. Place a stop, 2 candle stop. Okay, so we are risking 20 ticks. Our next technical target is right here at this pivot. And when we take a trade and we are approaching an area of liquidity, or we are approaching a technical support or resistance area, we take profit on the approach to that area. Why do we take profit on the approach? Well, it's very, very simple. We ultimately want to be out of the way and our order filled before the actual target is hit. Okay, we want to be the first to get filled, not the last to get filled. So 5 to 10 ticks prior to any target, we're going to start exiting. Well, in this instance, this was just 2 or 3 ticks prior to the target. So even if we just backed it off a little bit, we still got about 55 ticks on the S&P 500. Guys, 55 ticks times $12.50 a tick is $687.50 per contract. Okay, so this is $700 before 10 a.m. It's that simple. It sets up and it goes, right? How hard is it to say, okay, we've identified the area, price action is moved. We identified some liquidity here along the way. We also identified some targets on the Nasdaq along the way. So as the Nasdaq was hitting targets, we were taking profits. And then ultimately, like I said, we fell maybe a tick or two just short of the target here on the S&P. So let me show you the Nasdaq real quick, what that looks like and how that all transpired. So here's the Nasdaq. Same move, transpired roughly at the same time. Same scenario, MACD off the zero line, signal line leading, 15-minute 21 EMA, 15-minute 8 EMA, VWAP supplying pressure, 21, 13, 8 EMA, fast-moving averages. Market takes a little consolidation right here. It breaks that consolidation. We hit a pivot, close below the pivot, hit the next pivot, close below that pivot, and then ultimately into this channel structure below. Now, guys, this is just massive. We're talking about massive amounts of money right here. So again, we take that same 2 candle stop, but look at this. You're gonna fucking love this. Call that, oh, let's just, where are we here? Just want to hit that right there. Call that 495 ticks on the Nasdaq 100. Boom. Take a little bit of profit really quickly. No reason not to. Boom. Take more profit. Boom. Take more profit. Guys, 495 ticks times $5 a tick is $2,475. And a risk reward of 5.1. So 5.1 to 1, little bit of risk, boatload of fucking reward. Guys, if you're not taking trades like this, if your chart doesn't look like this, if you're not set up like this to be able to identify when something like this happens, let me do the hard work for you. Okay, that's what I'm here to do. I will do the hard work. I will set up the chart. I will do the analysis. I will interpret the analysis. I will tell you what I think, when, where, and why. I will tell you when the checklist has been met, and I will tell you when and where I believe the market may have the opportunity to potentially move in the favor of what the analysis is suggesting. I'll also tell you what hurdles I believe the opportunity may incur. Okay? And in doing that, all you have to do is concentrate on placing the order, placing the stop, taking profit, taking profit, taking profit. Guys, it's that simple. You can join me every single day live. Information's below this video. God bless you. I'm sorry if you missed out on 495 ticks on the Nasdaq, but if you want in, just let me know. I'll see you in the next video. Have a good one.